Hey everybody, welcome back to the channel. It has been a while since I released the Palantir Daily episode, and that's because last week for my 26th birthday, I was in Vegas. When I came back from Vegas, the flights ended up getting delayed, so I ended up, having to take connecting flights, and then I had to take 2 days to recover. I'm never doing Vegas again because it just takes too many days to recover. But we are back, and we are here for Palantir Daily. Going 5 to 6 days without releasing an episode, especially when I was in Vegas and the CART BBC interview dropped, and all I wanted to do was analyze it on camera, but I couldn't. It kind of proved to me every day this is just, it's not just about putting out a video. This is something that I have to do every day just to do. I just need to get it out of me every single day. It's become a part of my routine. And so I don't want to go 5 days without making a video again, primarily when there's too much news to discuss in the world of Palantir. So what video to get back into the flow of things than Palantir Q3 2023 earnings. This is going to be my recap video over everything I saw in Q3 2023 earnings. We did the live stream on Thursday, so yesterday. November 2nd, we had about 2,000 people show up to the live stream. So thank you all that showed up to the live stream and got to get some value out of the content and the coverage. This is going to be a comprehensive explanation of the things that I saw in this earnings. And my TLDR, if this is all you really care about, is that I think Palantir has made a change in its public perception around what they're doing with the trajectory of their business, specifically from a go-to-market and sales strategy. The numbers are the numbers, and we're getting to the numbers. We're going to look at all the nitty-gritty details, which really, if you sold the stock today and you take some gains, I don't blame you. I understand you might want to take some profits, but there was nothing. And when I mean nothing, I mean nothing in that earnings call that could have been a reason to be this is going bad. I should probably sell. There was nothing, not in the earnings call in terms of listening to Karp speak or in the actual numbers that made me feel this is a reason I deserve to take some profits outside of the fact that I wanted to take profits if you sold. So we're going to go through the entire earnings call. I think this is an inflection point for the company in terms of their trajectory to change how they go to market. And this is just the beginning of how they're going to market, which means the real inflection point, that 30, 40, 50% year-over-year growth, if we ever get there, might be waiting for us near in the future. And there's a lot to talk about. Overall, this was one of the best earnings calls we have ever had for Palantir, and the market kind of likes it, up 25% in the past 2 days. So the market agrees. Maybe things are changing for Palantir. Let's get into it. All right, let's start off with some price action. Here we go. Palantir, $18.90, up 5% on the day. Yesterday, it was up 20% after earnings, hit a high of $19.08. To give a little bit of context, the S&P 500 on average returns about 8 to 9%. Palantir is up 25% in the past 2 days. Now, obviously, the downside is as volatile as the upside, but this is the reason you invest in high growth tech companies, especially individual names versus an entire index, because if you're right about the thesis and the company actually executes, you can make a lot of money because you believed in a thesis and that thesis actually came to be true. Palantir in the past 2 days has proved that thesis at $18.90. One thing that's important about the price action is we did break above $19 for a little bit today, $19.08. Another thing is that 1840 was resistance a week ago after we went from 15 to 1840 because of the Israel situation. When that news broke, the market thought it was very good for Palantir in the context of their ability to gain more contracts as a defense contractor. So we got a premium for that, but it came crashing right back down to 1480 or 1460 because, ultimately there were no numbers to support. It was just this hypothetical thesis that potentially we may be getting more contracts as a result of the geopolitical instability that's going on. This 25% move, one could argue it's not warranted. It's a little bit too much for their earnings. My argument here would be that, look, the reason you invest in these types of companies is because they're always going to be quote unquote overvalued. But if they have a good earnings, there's so much retail momentum, there's so much institutional interest, even if they're not actually buying the stock, that people get interested. And $17 looks kind of cheap. $16 looks kind of cheap. $18. Well, if the stock could be $100, $18 is kind of cheap. This is the stuff that starts happening when a company really performs and it has a lot of momentum around it in terms of just retail interest and institutional interest. And as a result of that, you're seeing this 25% gain to the upside. We'll see if this can hold. We broke that 1840 resistance. Next week we'll see what ends up happening. But the fact that we got here, I think is incredibly important, and congratulations to all Palantir shareholders. A couple of quick macro points I wanted to make as well. The 10-year has fallen from 4.9 to 4.5%. This is a pretty dramatic decline in the past week. So there is some more liquidity probably moving out of the bond market, going into the equity markets, and that's why Palantir is benefiting a bit from the macro. But overall, when you have an earnings the way Palantir had an earnings, you're going to get a move to the upside, and that move to the upside, as per the market, was validated, and they like the stock. Okay, so let's actually talk about some of the other important things that happened in Palantir's Q3 earnings. I'm going to separate this in three sections: go-to-market, customer count, and then U.S. commercial revenue. Those are the three things I wanted to talk about, and we'll get into smaller things in between those three things. So let's start off with go-to-market. AIP boot camps. If you've been keeping up with the channel or keeping up with Palantir writ large, you know that AIP boot camps are their new go-to-market strategy. The problem Palantir has had really since, I would say the problem Palantir has had really since 2021, and Palantir admitted this themselves, is that they didn't know how to sell. They knew they had one of the best products in the world. They knew Foundry was amazing. They knew they had a differentiated moat, but they didn't know how to get people to understand that moat, and they didn't have a major sales force the way some of these other companies did, like Snowflake. AIP bootcamps has been their answer. I don't know who came up with this theory that you can basically have a ton of clients in one bootcamp, build them products based on their own proprietary data, and then let them leave the bootcamp with those products that are not demos. They're not like Zoom sizzle reels. Those are real things that they can use so that they can go to their CEO, their CTO, and say, hey, Palantir helped us build this. It's kind of impressive. Maybe we should look into them a little bit more and scale that across the entire country. And that's what Palantir is doing. They say we're on track to conduct AIP bootcamps for more than 140 organizations by the end of November. These immersive hands-on key sessions allow new and existing customers to build live alongside Palantir engineers, all while working towards the common goal of deploying AI in operations. Here's a quote that I thought was incredibly important by Elliot Smith, who's a data scientist at Trinity Industries. He says, I approach this engagement very critically. It's hard for someone to come in and build a product in one day, especially when we had been working with other entities for months and hadn't seen results. We worked with Palantir and got the results that we wanted in less than 8 hours, and we presented to our CEO the very next day. That, to me, is a big deal. Data engineers, data scientists, they're not necessarily the nicest people in regards to you trying to tell them how to do something, because they tend to be a little bit more arrogant, right? Because they're in that space, they're working, they're coding all day. So for them to come to a boot camp that they probably didn't even sign up for, that their management said, hey, you have to go here, maybe there's something here, and then Palantir works with them, they end up building something really unique, and then they're like, wait a second, we couldn't build this for months, we just built it in 8 hours. My question simply becomes, as shareholder, what is the conversion, right? What is the conversion going to be in regards to how those people end up thinking of and using Palantir when in 8 hours you built a prototype that could actually be, used in your organization? Shyam Sankar, the CTO, on the earnings call said that they were going to do 70 boot camps in November. It's November 3rd, so you can imagine they've already done a couple of them already, and that is more than they've done in all of 2022. So now think about this. I just want to put this in context. They are going to do 70 boot camps this month. Who knows how many they're going to do in December, 80, 90, who knows how much this scales month over month, 10%, 20% growth in terms of the active boot camps, which means more than what they've done all of 2022, all of 2021, really all of the history of Palantir, right? For the past 20 years, they haven't been a sales-focused organization. In 1 month, they're about to do more selling than they've ever done. The reason this is so important as a Palantir shareholder is because if you believe they have the best product in the world, distribution, and Peter Thiel in that beautiful book 0 to 1 says that product means nothing without distribution. You could have the best book in the world. If no one knows that it exists, no one's going to read it. That was the biggest problem for Palantir. I like AIP bootcamps because this is a product-driven approach to selling. So this is not a steak dinner. This is not, show you a PowerPoint. This is not a Zoom session. This is, hey, come to us, or we'll come to you. Stay with us for a couple of days. We're going to build you something. And then if you like it, you can keep it. And if you really like it, you can pay us a little bit of money. Like, that to me is in Palantir's DNA, and that's why I'm so impressed by this go-to-market strategy, and that's why no wonder that this go-to-market strategy is working. They are a product-driven company building products for potential customers, not customers, but potential customers. And then those potential customers have to ask themselves a question: if we built this in a couple hours, if it's real, if it's working, if it's being used on our data. It's not some mock data. It's like if you're an automotive company and you bring in some supply chain data and then Palantir builds an entire LLM or terminal that you can use with it, and you're seeing AIP in action and you're like, holy crap, I would pay a couple million to just use this every day. Like, the conversion on that has to be a lot more stronger. And so as a result of that, I think AIP bootcamps are an inflection point in the trajectory of Palantir's ability to do sales and distribution. And as shareholders, we really need that to become a big thing in 2024, because this company cannot get to the promised lands, cannot get to those beautiful price targets we think it can get to, unless they figure out how to sell, and unless they, in the words of Karp, capture the market. To capture the market, you got to sell. To sell, you've got to show people why it's worth buying. And it seems like AIP bootcamps are the best way for them to be able to do this. Now, having said that, bootcamps seem to be working. So let's talk a little bit about customer count. First of all, Palantir put up $558 million in revenue, 3 cents of GAAP profits, right? So they are officially GAAP profitable. They are eligible to now be in the S&P 500 in 2024. I don't think the stock is really rallying off the news that they're going to be part of the S&P 500. Probably a month or two leading up to that, there will be a little bit of momentum there. But they are, 4 consecutive quarters of GAAP profitability, so they have the chance to get there. U.S. commercial is what I really want to talk about in regards to customer count. So look at some of these numbers here because they're really interesting. 33% year-over-year U.S. commercial revenue, 37% U.S. Commercial customer count. 102 U.S. commercial deals closed in Q3. 65% quarter-over-quarter U.S. commercial deals closed as well. And this goes to this customer count slide that I wanted to bring up from the deck. Right here. So customer count last quarter was 38% year over year. Now it's 34% year over year. So one could argue, oh, well, it's declining. That's not good. And that is okay on a surface level form of analysis, but that really doesn't matter because commercial customer count is going up, and that's what mattered. So they added about 32 customers this quarter. 28 of them were commercial, 3 of them were government. That's why you saw customer count overall go down, or really it was flat, right? 8% between the 2 quarters. But if you look at commercial customer count, it went from 8% to 9%, and that's what really matters. Why does that matter? Because if AIP boot camps are working, you should be getting commercial customers. You're probably not in a boot camp with the IRS, right? Or the DoD, right? Those are much bigger contracts. It's harder to sell. And so there's a whole different sales process to that. But if the boot camps are working, then you should be closing deals with commercial customers. And that is what I wanted to see as a shareholder. I said before the earnings call, the only thing I really care about is can they convert more customers, even if they missed on revenue, even if like the operating income margins weren't that great, which by the way went up this quarter, which are just phenomenal. I cared the most about commercial customer count and how many more customers are we getting. And the more customers we get, the more chances we have of being able to really monetize AIP going into 2024. Even if not all of them are buying AIP, we can start selling them and upselling them on what AIP is. And it goes down to this slide as well on commercial customer count that I think is important. They closed 80 deals of at least $1 million in Q3 of 2023. This slide last quarter was 66 and the quarter before that was 64. So 80 deals of at least $1 million, 29 were $5 million, 12 of which were at least $10 million. They only added 32 net new customers. So 80 minus 32, you've got 48 potential upsells that they had on a different customer. Sham Sankar also mentioned that they closed a $40 million deal, TCV, total contract value, with one of the largest construction home builders in the United States. Which makes sense because if you look at the inflation data, we need a lot more supply of houses to bring down the price of houses. And the fact that one of the largest construction builders in the United States was like, hey, can we use Palantir to be able to help us build houses more effectively? It just goes to show the diversity of all the deals Palantir is getting and why they're getting these deals in the first place. You can also see here their operating income of $163 million was a 29% margin. This is the highest it's been in a very, very long time since Q3 2022. This is, when it went down to 17%, this is when most people sold. There were some people on the tubes of used that sold at $8 when cart banged on the table because that was just a bad quarter, right? But if you're a long-term shareholder, I mean, if you've got 2030 in mind, if you're willing to give them the benefit of the doubt, because quite frankly, there's not that many good companies out there anyway. And if you find a generational company that matches all your boxes, but some of the numbers are off, you give them the benefit of the doubt. Even if you're down thousands of dollars, you just give it a shot instead of selling at $8. But nonetheless, that was a bad quarter for them. 17% margin back in Q3 2022. Things have changed. Q3 2023, that is almost doubled at 29%. And it's just amazing for them to be able to see that they're doing that at scale. So I think their investment in these AIP boot camps, along with the commitment to convert these commercial clients, while also showing them the potential use cases by just giving them the product, resulted in a 45% year-over-year customer growth, is starting to result in better operating incomes, and is really showcasing that if they can just grow these boot camps month over month, 10, 20%, and that affects the underlying conversion of the clients, potentially we could see, we're at 453 clients right now, we could see 2,000 clients maybe in the next 1.5 years by 2025. And it would be a little crazy if we see that by 2024. They would have to really ramp it up. But by mid 2025, you could imagine, hey, 2,000 customers paying on average, these $20, $30 million contracts. You could start to see some really, really big numbers for Palantir. Okay, final thing I want to talk about, and then we're going to look at some clips of Karp speaking on this earnings call, because Karp did a pretty good job making his point, is U.S. commercial growth. So U.S. commercial revenue growth right here, 33% year over year, 88 million Q3 2022, now 116 million Karp said they were growing like a weed about a year ago, and we all kind of thought, is he just saying that? Is he just putting it out there? He also said we're getting more demand in 1 month than we got in an entire year. We were all like, is he just saying that? Is he being facetious here? It doesn't seem like he was just saying that. To see U.S. commercial growing the way it's growing is just absolutely phenomenal. Now, international commercial, I think, is growing at maybe 10% year over year, even if that, as per the last 10Q that I saw. So we'll get an update on that when we get more of the numbers. But U.S. commercial is what gave them GAAP profitability, right? David Glazer, the CFO, he was asked on the last earnings call, how can we guarantee you're going to be GAAP profitable? And he said, focus on U.S. commercial. U.S. commercial is what's leading us to get that to get to that GAAP profitability, because we are growing, and not only growing, we're expanding in U.S. commercial, and the United States and commercial clients really are interested in Palantir. I mean, they hosted 2 conferences, for goodness sakes, around AIP just for commercial clients in the United States. So it makes sense for why that's going well. U.S. government growth was 10%, $229 million in Q3 from $209 million last quarter. So I think overall government was like $330 million. I have to check the exact numbers, but that is nice to see. One of the things they mentioned on the earnings call is that, look, governments go up and down. Sometimes you get them, sometimes you don't. We got a $250 million AI research from the Army just a couple weeks ago. That NHS contract that I'll talk about in a little bit is still up for grabs. And so government revenue growth being up or down really is not that big of a deal to me, because we know that the government relies on Palantir. We know that they're not leaving Palantir anytime soon. And we know that really that creates a floor for the stock, which is that the government will not let this company fail, because this company is just way too important. But U.S. commercial going as high as it did, that's what I think really mattered the most. They brought in $72 million of profits, which was also awesome. They now have $3.3 billion in cash, so they did not do any share buybacks. They had $3.1 billion last quarter. Now they have $3.3 billion, so they added $200 million to those buybacks, or to their cash reserves. And you can imagine they put that money all into T-bills and generated probably 4%, 5%. Maybe an extra $40 million onto their balance sheet. So having that cash reserve and zero debt in these economic environments where we don't know if interest rates are going higher, Jerome Powell says it's not going higher, but imagine if it does, it's just one of the most flawless balance sheets in the stock market, right? Not everything is perfect, but to have $3.3 billion in cash and zero debt, and as a result of that, be able to become way more GAAP profitable than you were last quarter, right? $28 million to $71 million. Not only is the business itself growing, you're getting more commercial deals to be able to expand that, but you're also getting the treasury income, the net interest income, simply because you have money in the bank, which is also really good. Again, total revenue growth was 17% year over year. Last quarter kind of sucked at 13% year over year. Look, 17% is close to 20%. It's not the 30% CAGR Alex Karp promised a couple years ago, but he's got 2 more years left to make good on that promise. You never know in the next 2 years if they end up growing 40, 50% and it CAGRs out to 30% and they end up doing $4.5 billion in revenue by 2025. Karp would have been correct that, and you just needed to give him the time to end up doing what he needed to do, and then he would be right. Average TTM revenue per top 20 customers, this is up 13%, pretty much the same as it was last quarter. I think last quarter was 52 to 54 million. Billings is up 8%. This is a little bit lower than it was last quarter, but that's not that big of a deal. And then gross margins continue to be at 80 to 82%, because Palantir is a software company, not a consulting firm, which is why their software ends up having these margins. Another good point that they mentioned on the earnings call was that the average revenue per employee went from $299,000 back in 2019 to $588,000 in 2023. So basically doubled. They added a couple thousand more employees. So although they added a lot more employees, their average revenue per employee did not go down. It in fact doubled, because the value of those employees, the quality of those employees are so good, are so strong, they don't have to go buy other companies like Databricks or Snowflakes. They can just build their shit themselves, because they have the employees and the talent, which we are compensating as shareholders to allow them to do that, which is why we're seeing some outsized returns on the stock, because they're building products that are scaling, because they have the employees that are worth the ability to actually build those products. And so from that perspective, again, on all the numbers, there just wasn't anything I'm seeing in these numbers that are scary or bad. And look, a couple quarters ago, some of these numbers were tough to deal with, but it seems like if they can scale these boot camps and they can scale U.S. commercial, and then if international commercial starts working, if international government revenue, if the NATO countries really start calling in, there is just a lot of opportunity for Palantir. Okay, so my overall thoughts on earnings. I think Karp, during that call, if you listen to him, sounded like a startup founder. He didn't really sound like a CEO of a major tech company. I think Karp has a mission I think he has a message. I think he wants to be the biggest and most important software company in the world. He showed his steadfast support with Israel. He didn't stutter about anything, right? He said, look, this is terrorism. We support them, and that's it. In regards to AIP and competition, he said, I quote, we want to build products so well that the competition doesn't want to compete anymore. And I think, they will always have competition, but they're on the path to actually executing against that axiomatic truth, right? This value that they want to live up to, which is we want to build products that are so good the competition doesn't want to compete anymore. 0 to 1, the whole point of Peter Thiel's philosophy on how he builds companies is don't have any competition. Build stuff that's so amazing that everyone's just like, we can't do anything. Like, you've got it, bro. Like, you've got it. And obviously Palantir is competing in a very highly competitive world. There's a gold rush for AI investors, different competitors. You got Snowflake, Databricks, you got everybody that wants a piece of this world. But I just feel comfortable at night betting my money on a guy that definitively believes, and genuinely believes that they're building one of the most important companies in the world, and they're doing it in the way that they want to do it. Here's a clip of Karp talking that I think is important to take one last look at on the earnings call.
It's not just that we win clients. It's that we set a standard that the competition can never meet. And that this is really important for our go-to-market strategies. Like, you can pretend you're going to build PG. The French government announces they're going to rebuild it for $40 million. You can't rebuild PG for $40 million. You can't rebuild it for $1 billion. You need us. You can't rebuild Foundry. You can't rebuild Milan. When we go to market with AIP, the clients are learning two things. They're learning, I could use this. They're learning how to use it. They're also now going to go to every other vendor and say, but I want my thing to provide operational results. And Palantir has done this in 6 hours. I like you better. I'll give you 6 days. I prefer you. Your steak dinner is better. Your suit is better. Your backing from the analyst is better. You don't have the madman sticking up for things that are good and right in the world, despite them being unpopular.
So, again, you're seeing a typical Karp saying, look, all these software companies make thin products. They sell it with a steak dinner. They have to acquire other companies, like Databricks acquired Mosaic ML for $1.3 billion. Snowflake acquired Neva for under $50 million. Palantir's not acquiring anybody. They're building this shit themselves. They're hosting 2 conferences in 1 year around the most revolutionary AI platform that they've created. They were doing AI before it was AI. And now with this boot camp strategy, we're seeing potentially the fruits of their labor start to convert in regards to clients recognizing how valuable they are, and then Palantir just getting more deals than they've gotten before in the past. I could not be more proud as a shareholder for what they did on this earnings call, how they've executed. I've been with the company for a long time. I've been buying shares since it was at $6. I believe in the company very deeply. And the revenue growth isn't fully there yet in terms of like the crazy numbers we want to see, but as a shareholder, you got to look back and be like, well, the stock's up 188% year to date. They're GAAP profitable. They're eligible to be in the S&P 500. They have 0 debt. They have $3.3 billion in cash. They haven't even started doing share buybacks yet, which is going to reduce the float. They are growing 17% year over year. Not amazing, but it's definitely not horrible. Interest rates are at 5.5% or 5.25%, and they're figuring out a way how to monetize on those interest rates. Their average revenue per employee is $588,000, which means they don't have a ton of fat in terms of their employees, right? Those employees actually matter. Their commercial customer count is growing 45% year over year. It just gets to the point where you're like, and then do they have a moat? All these numbers are not too bad. Then it's like, do I think they have a moat? And if I think they have a moat, and I think there's all these shitty companies that are public on the stock market, there's really like maybe 10 or 15 that are even worth looking at as an investment opportunity. I look at Palantir and I'm like, goodness gracious. This is one of the most exciting, interesting, eclectic companies in the world, led by a guy who actually believes he can take over the world with his software company and wants to take over the world the right way, not by monetizing people's data, but actually protecting Western values. And so from that perspective, I like the stock, man. I like the company. It's been a fun earnings call. I did not expect the earnings reaction to be this amazing. Palantir right now, as I'm looking at it, $18.95. Who knows if $17, $18, $19 is the new floor, whereas $14, $15 was for the past couple months. And we'll see what happens. But this has been an exciting earnings call. I have a lot of more coverage on earnings and all these different price target analyst stuff. I haven't even talked about all the stuff that we got. We got a ton of $21, $18 price target upgrades. And so we'll discuss that more in future episodes. But this is one of those earnings calls where you look back and you're like, I'm really happy to be a Palantir investor, and I'm proud of how the company's executing. I'm part of this company with my investment, and let's see what they can do going forward. Thank you guys so much for listening, watching. I hope you guys enjoyed. I will see you in the next one.